So currently there's 300 million users of crypto worldwide. It's growing at 185% a year. So that means by next year, you're at 700 million people.
Whoa.
And then the year after that, you're at 1.5 billion people.
Hello, everybody. You're listening to Chatting with Candice. I'm your host, Candice Horbacz. Before we jump into this week's episode, we're going to do some shout outs really quick. So I wanted to say thank you to John B for all of those cups of coffee. And thank you so much, Wesley, for all of those coffees. I really appreciate it. And all of those resources go directly back into the podcasting for advertising and production value. So thank you so much. I couldn't do this without all of your support. So this week I am really excited and nervous. This is another episode in what I'm calling our crypto series. I have the one and only Raoul Paul joining the podcast. And if you don't know who he is, he's a former hedge fund manager. He's the co-founder of Real Vision, which is a financial media company, and they offer in-depth video interviews with some of the biggest names in the world when it comes to investing. So a lot of amazing resources there. He is one of the most prominent voices right now when it comes to the Web3 and crypto space. So we are all very lucky to have this amount of time with him. So please help me welcome, without further ado, Raoul Paul. Well, I first want to start off by just saying thank you so much for joining this podcast, Raoul. I know you are in extreme demand and you're one of the most prominent voices, I think, in this space right now. So I just want to start off by saying, I'm very lucky to have you here, and so are my listeners. So thank you.
It's great to be here. Really looking forward to this.
So for people that maybe don't know you or your background, do you want to give a little bit of an intro into your history and your expertise?
Sure. So my background was finance. So I'm 30 odd years in the financial industry. Back in the 90s, I was at Goldman Sachs, where I ran a big business there. Then I ran a hedge fund in London for one of the largest hedge fund firms in the world, doing macro investing, which is investing in currencies, commodities, stock markets, all around the world, all sorts of stuff. And then eventually opted out of the rat race, moved to the Mediterranean coast of Spain, and started writing macroeconomic research and investment strategy for the world's biggest hedge funds, family offices, pension funds, that kind of stuff. I was in Spain during the financial crisis in 2008, and then the European crisis when we almost lost our entire banking system there in 2012. And that set me on two separate journeys. I realized that those of us at the center of the financial system knew everything. We also knew the financial system was totally broken. And I thought people would come up to me and say, well, why didn't we know? I was one of the people who predicted both of those events. The people in the film The Big Short were all clients of mine. And I sat really uncomfortably with me. It's like, why do some people know and others don't? And how can I change that? So the two journeys I went on, one was I started Real Vision, the financial media business I run now, which is a kind of long form video where we give people access to the most ridiculous people in the whole financial world. And that's been an amazing journey. The other journey was my crypto journey that started at the same time. So I went around the world trying to start the world's safest bank with a bunch of these kind of wealthy family offices. And it's a slightly hubristic thing to do, to think I can go and start the world's safest bank, but I thought I'd give it a go. And it proved pretty hard. We went to Singapore, Switzerland, the US, all over the place trying to do this. And one of my clients, tapped me on the shoulder and said, one of the answers to the entire financial system is Bitcoin. And this was 2012. And I started doing the work on it. And I first invested in it in 2013 and probably wrote the first ever piece on it. The kind of macroeconomic analysis of Bitcoin and where it could go and how to value it. And then cut forward that journey is that those two journeys combined. When we launched Real Vision, I think the first video I ever produced was about the role Bitcoin will play in the future financial system. That was 2014. And I kind of been part of that mission ever since. Is A, the system's broken, B, people need to know about it, and C, here's your solution. So that's what I've been doing.
Well, it sounds incredible. I feel like I'm late to the party a little bit. It took me a while, I guess, to find interest and like true curiosity in what's happening. And the more that I dive in and the more that I learn, it just seems kind of like the new version of like the Oregon Trail, which is like we're all pioneering and there's some risk, there's a lot of uncertainty, but the amount of this new version of freedom that kind of comes along with it, as well as like financial opportunity, just seems like I don't want to miss that. So I'm trying to learn as much as possible and just try to spread that information as best I
But
can.
we're all on that same journey. So if anybody tells you they know what's going on or where it's going, they're lying. We don't. It's all new. It's
Mm-hmm.
the fastest adoption of any technology in all human history. So the internet was previously the fastest adoption of any technology. This is growing at twice the speed. So currently there's 300 million users of crypto worldwide. It's growing at 185% a year. So that means by next year, you're at 700 million people.
Whoa.
And then the year after that, you're at 1.5 billion people. So what's amazing about it is, yes, it's amazing the technology and Web3 and all of the power it gives back to the individuals and all of the great stuff. But the big difference here is by owning the tokens, you're being part of the network as well. So you can not only get the benefits of this new system in a social sense, but you get it in an economic sense too, because it goes up in value. It's like finding Facebook back in 2010 and being given shares in Facebook that everybody who used Facebook had shares. It would have made everybody rich.
Mm-hmm.
This is what this is doing, because you get the utility of all of this and you get the financial benefits.
Yeah, and I think a lot of hesitation for people that maybe haven't adopted it yet is just ignorance, right? And we kind of run away from things that we don't know because we don't want to look stupid. So that's why I'm here, is to look stupid for everybody, for my audience, and just to learn. But I think it starts with understanding like what is money, and I've heard you talk a little bit about this when it comes to like currency debasement, because what I was always taught was you save money. You just put it into an account and you watch that number get bigger, and then hopefully whenever the day comes, if it comes that you don't want to work, that number will support you for the rest of your later years. And then the more that I'm learning, I'm like, well, that doesn't sound like a very solid plan, and that's also not risk-free. Like everything comes with risk. So I would love if you could kind of explain I guess like currency debasement and why maybe investing is a better idea than just hoarding your money in a savings account.
Yeah. So I think the best example to use is for the millennial generation. So anybody's kind of under the age of 35, say 25 to 35. So most millennials are now in their early 30s. And in their early 30s, they look at the world and they look at their income, and you can't buy a house.
Mm-hmm.
And the stock market is expensive. It's at all-time record valuations, and the bond market and all of the investment world is incredibly expensive. And so you're stuck where, okay, you start saving a few $100s a month. The problem is there's no interest rates on your money. So it doesn't grow. But meanwhile, the cost of everything goes up more. So you're actually getting poorer. So you have to save more and more money, and it becomes almost impossible. So what is the factors playing out here? Why is this becoming so difficult? Well, we used to have higher interest rates, but because of this huge baby boom population who are retiring, plus the amount of debt in the system, interest rates have fallen for 3-4 decades now to now zero. So nobody gets any interest on their money, but we still have inflation. So the normal cost of goods normally has been running at like 2% a year. Doesn't sound a lot, but over time, over a 10-year period, that ends up being 30% or so of your money, that your purchasing power that you've lost. So unless your income goes up or you save more and more and more every year, you're kind of behind the game.
Mm.
But then there's a bigger thing. So right now we're seeing high inflation. We're seeing inflation at 8%. So then you're really behind the game unless your salary goes up enough and you can start saving more. So everyone's behind the game. But then there's another crazy thing happened when interest rates hit zero, and we got to 2008, that famous financial crisis. the central banks started using something like the Federal Reserve, being the central bank of the United States, started using a different way of trying to stimulate economic growth and save the banking system. And that was called quantitative easing, which is a fancy word to say we're going to print more money. And when you print more money, you devalue the money. So to put it in layman's terms, if you are really thirsty and somebody says, well, I've got a bottle of water, I'll sell it to you for $5, you'll pay $5.
Mm-hmm.
If somebody gives you 1,000,000 bottles, it's worth nothing to you. In fact, you pay somebody to get rid of it because it's cluttered up your entire house. So things that are, if there's too much of something, it becomes valueless or less valuable.
Mm-hmm.
So one Mona Lisa is valuable, 1,000,000 Mona Lisas, not valuable. And that's what's going on with money. They're debasing it, which means that they are lowering the value. Now, you don't see it very easily. All you see is that these asset prices keep going up. Every time they do this quantitative easing magic, the price of the stock market goes up, and the price of housing goes up, and the price of crypto goes up. And everyone's like, well, I can buy less of it now suddenly, but my income hasn't gone up. That's debasement. So you're now poorer and you didn't realize how it happened and you don't understand it. And it makes people angry because they don't understand why they can't get ahead. You know, wages over the last 50, 60 years haven't gone up. And the reason being is the millennials are in the workforce with their parents. So you've got the two biggest cohorts of people ever competing for jobs. And then there's globalization, i.e. Chinese workers and Indian workers and Mexican workers. And then you've got technology. You've got to beat the robots and AI who are taking everybody's jobs. So wages don't go up very much, but the cost of all these assets keeps going up because people are devaluing the dollar. So that's why it's so hard to get ahead. And that forced me to look at, okay, how do we get around this? What can we do that's more sensible than what we were told? Because our parents were all told save money, but they had 7%, 8% interest rates. So it adds up pretty quick. But this doesn't work. So what I did is I started looking at all of these assets and dividing them by the size of the central bank balance sheet. So how many, how basically how much the Fed have printed. And what you found is the stock market didn't really do much. The S&P 500. The property market didn't do much. So they were just basically keeping in line with what was going on. So they protected your money, but you didn't make money. You didn't get richer. But when you looked at two things, they were the only things that made the real difference. One was technology stocks, because we live in this technological age of incredible change. And so those things tend to do well. But the thing that beat them all was crypto. Crypto did extraordinarily well because what you've got is some forces at play. One is there's digital scarcity, so you can't print more of it. So if something is being printed more of, it goes up in value versus a thing being printed. So that's great. But the blockchain technology was like a call option on the future financial system and the future of the internet. So you've got something that looks like a tech stock with adoption and has the safety of, let's say, gold. So that became like the holy grail. And then, the speed of adoption, everything else is what's driven the price rises. So that's why crypto's been such a good savings vehicle. I made a video on this several years ago that's probably had 3 or 4 million views now on YouTube about the retirement crisis. And back then, I probably did this in 2015 or so. I said, if you are a 30-year-old, your answer is to start saving in crypto, because that is the big opportunity, because the upside is so much larger. So yeah, that's the only way I see it that you can get ahead. Or start your own business is the other way.
Right. Yeah. And that's so interesting because a lot of the critics, when it comes to crypto, kind of make it seem like it's this giant scam that just hasn't revealed itself yet. But like you said, if you look at what is growing and what seems to be, I guess, like the safer bet when it comes to investing, you can't really deny. You can't deny Bitcoin, right? Or like Ethereum as of late. So when it comes to those two coins, because I feel like those are the most popular ones right now, can you kind of get into like the main differences between Bitcoin and Ethereum as far as like usage and application?
Yeah, so Bitcoin is still the big daddy of the space, and it's the OG. It was the first one to launch. Now, Bitcoin has some very unique attributes, which is that it is, got this very restricted, understandable, knowable, non-changeable supply. So you know how many Bitcoin are going to come onto the market every year, and when that stops, when we get to 21 million. It's also the way it's constructed is a proof of work mechanism, which means that there's lots of computers around the world, Bitcoin miners they're called, who have to solve this complicated algorithm, and it's expensive. You need huge computing power, and that network of miners basically protects the network. So there's not a single person that validates everything. It's all of these people. So Bitcoin is incredibly secure and robust. So for a system of money, meaning for savings or collateral, the things you borrow and lend against, it's amazing because it's so understandable, knowable, definable. It is slow because it requires all of this computing power, and expensive to do things on. So it has not been used as the kind of applications layer. It's kind of the base layer of the money system, the new digital money system. Ethereum comes along and it does something uniquely different. It didn't set out to be money. Well, Bitcoin set out to be money in some respects. It set out to be an applications layer, a platform of which we could build on blockchain technology. And its piece of magic was something called the smart contract. So Bitcoin, there is nothing smart in it. In fact, it's pretty dumb. It just does what it does, which is why it's so perfect. But Ethereum said, well, if we can make contracts code, then almost anything in life is a contract. Me coming on your podcast is essentially a verbal or written contract over email, right? Almost everything in life is a contract. So therefore, if we can record all of these contracts and make them transferable in this new world, then we've created the whole applications layer for money, the internet of value, and everything else. So Bitcoin is more single use case specific, but very powerful in what it does. Ethereum is like the whole internet. So it's a much broader thing. And they're very different. And people try and compare them and say, well, one's not the other. And they're not supposed to be. They're both amazing in their own way.
So when it comes to these smart contracts, how does that specifically, or how do you see it affecting like creators and artists in the future? Because to me, anyone that's supposed to be getting money off of royalties, for example, and maybe they're not, or if you take more of like a predatory industry like the music industry, where the artists have kind of fallen victim to like these large companies, like do you see like Ethereum being a solution to some of those common problems?
The smart contract is the solution. So what you're able to do is you're able to have a direct relationship. This is what you're hearing the buzzwords Web3. This is what Web3 is all about. You can have a direct relationship with your community. So you've got a community around your podcast. Now, where do you communicate with them? Maybe it's on Twitter, maybe it's on Instagram, maybe it's wherever it is. But you don't own that relationship really. And they get monetized by being on that platform by other people. Now, in this world, you could have your own Candice token where that unlocks the benefits of being in your world, and you now have a direct relationship with the people in your community. And they will start, if they now have this investment where culture has become an investment, they want to hang around your culture, what you're building, and they're aligned with you. They want you to succeed because their tokens will go up in value if the network thrives, if your community thrives. So they're going to help promote you, do all the things for you. So now you've got a much healthier relationship with your audience, and you don't need a marketing middleman as much. You don't need to pay for promotion as much. You don't need to do all sorts of things as much. But that's just the start. If you're a music artist, well, right now you have to put your music on Spotify, and they give you a very small few cents for millions of downloads. But in this case, you can find your true fans, issue an NFT that gives them either the music itself or some rights to the music or an ability to get the music earlier, whatever you choose. And you're giving your fans now benefit, direct economic benefit, and they will pay for that. And what you're now not doing is using Facebook or Google or anybody else in the middle. You're doing You've got this direct relationship. You're fulfilling your fans' needs. You are building the needs of the community, and you're trying to all add value together. And that works at so many levels in music. Tickets. So ticket prices, what you and I pay when we go to a concert, is not really reflective of the costs, because there are so many middlemen, whether it's scalpers or whether it's, Ticketmaster themselves, whether it's the venues. Well, if tickets are NFTs, then they become savable. Like, I've still got my ticket from Live Aid in 1985. It was like one of the great events of my life, and I've got my ticket. But if I have that on a blockchain, it's proven that it's mine, and I can sell it to you because you want to buy it from me. Or that community could have thrived for the next 30 years for anybody who held the ticket to say, I was there. And then, maybe we get discounts to other events. Maybe we get, all of the artists who are there want to bring us in their communities. So tickets become an obvious thing that go on the blockchain. Music IP goes on the blockchain. Artwork goes on the blockchain. It can be pretty much anything. Now, a lot of it is still restricted by, so video will go there as well. So whole movies can go that way. Right now, you can't actually put a movie itself on the blockchain. So you have to kind of point to a location of that movie on a blockchain. But technology is moving forward incredibly fast. So basically, this is the entire rails for everything that we do. Every relationship that we have, every financial relationship or relationship of value or connection with the communities that we exist in, are all going to blockchain.
Mm. Oh man. So I have a question regarding, I guess, like the life cycle of a creator or an artist. So if you're trying to get involved in this Web3 space and figure out how to monetize your community, like what are like the ethical ways to do it, and then maybe the not so ethical ways? Because I've seen, and I know that there some people say NFTs are no fucking thanks. Like that's what people are like, the opponents of the technology, because they see these rug pulls. I think one of the more famous ones was like the Squid Games NFT that went belly up, and then you had this whole community of people that just got scammed. So I guess like the ethical life cycle of a creator to monetize that, and then as the consumer or the fan, like what are some key points to look at to, I guess, invest wisely?
As with every contract that you have, is, do you trust that person? Right? Who was behind the Squid Games thing? Nobody, you didn't know. You didn't have a relationship. So people were just looking, oh, this looks like a cool idea. I'm going to throw money at it. Difference is, if you say, I'm going to create a series of 1,000 NFTs for my true fans, and I'm going to give them to you, and those first 1,000 true fans, anybody who owns that NFT is going to get a bunch of stuff. I'm going to have meet and greets. I'm going to release some special content. I'm going to, have, Zoom calls with you. Okay, now those things have value. You've not monetized anything. You've given it to people. Okay, that's a first good start.
Okay.
Because you can monetize later. Because then once you've got these true fans, the NFTs now have value, and maybe other people want to join the community. So maybe you say, well, the actual size of this is 10,000, but I've given the first 1,000 out. Now suddenly the market will set a price, because people will want, if you prove that you're going to add value to the community, then those NFTs will have a value, and suddenly, before you know it, they're trading at $1,000. So now you can sell more of the NFTs to give other people access. But again, you have to keep proving that you're adding value, that it's not just an idea.
Or like a money
It's that,
grab.
no, it needs to be a utility, that we're in this together. We're trying to build something between community member and influencer or artist. Once you do that, once you see that, it's genuine. Does it mean it's going to work? No. It depends whether the community grows and the benefits are good and it catches on, enough people hear about it. But that's generally how it should be done. Anybody who's just launching something because it's meme, sure, if you feel like speculating with a few bucks doing it because it's fun, by all means. But that's not Web3. That's just fun speculation. Web3 is this symbiotic relationship between the creator and the fan.
Yeah, and that makes me really excited because you're getting rid of like the need for these mega corporations, and you're putting the value where I think it should have been this whole time, which is in the creator, within the artist, and within the community. And I've actually seen some like pretty prominent public figures that tried launching NFTs and like social tokens, and for some reason or another, it just like didn't do as well as they had anticipated. And they got ahead of it, and they were like, you know what? This isn't what I wanted, and I'm still learning too. So if you want, like, here's a refund, and if you want to hold, then you can hold, and we're in this together. And then I've seen the opposite, which is like, well, it's an investment and they're risky, so I'll take my cash and leave. And to me, I'm like, why would you do that? Because you just killed your brand and you killed all trust, and you can't come back from that.
But this is why I love this, because in the end, it means those that look after their communities can grow the value of their communities.
Mm-hmm.
Those that destroy them can't. So what happens is the communities who look after each other are vibrant, and the other ones just fail because, as you've said, you've trashed your brand, so nobody trusts you. You've broken that circle of trust, and so in which case your ability to grow in this Web3 world has gone down. So it actually polices bad actors versus good actors. And what happens is people get attracted to places where you see that they're doing a good job. You know, a great example of this is Bored Ape Yacht Club. At first, everyone's like, why the hell monkey JPEGs? Who cares? This is stupid. But then they realized that they built a real robust community, and then people were building on top of it because they allowed the IP rights to be part of the smart contract. So that meant that people like Timbaland, the music producer, could build Aping Productions, which is four apes, bored apes, and he's built music around it, and he's created a record label with NFTs. So now you've created an ecosystem, and Animoco Brands is creating a game around it. And then eventually they dropped the ape token, which was because the apes were too expensive for a large community, but they were the statement of intent. This is what our community stands for. We want people to build amazing stuff. We want to be a kind of a culture media brand. And then the ape token meant that millions of people can now participate in that. That's really clever.
I didn't know. See, I'm still learning about the Bored Apes, and I'm still kind of on the fence of like, I don't understand why this JPEG is so.
I wrote a big tweet thread on this, and it's also a Substack. So look my name on Substack, and I wrote that because I just bought my Bored Ape, only a couple of weeks ago, and I explained why and what Yuga Labs is up to, what this all means, how it all relates. So it's not a kind of idiot's guide to NFTs. It's an idiot's guide to how Web3 works and why this matters.
No, I'll definitely check that out. And honestly, I think the work that you're doing is so incredible, especially with Real Vision and, as you've put it, like the democratization of information. Because I think The Big Short was one of my favorite movies. I've seen it 100 times, and every time I'm like, how did no one know? Like, how come this information isn't just out there? So the fact that you're podcasting so much and you're giving away so much information for free, and then obviously there is some stuff behind a paywall, I think is incredible.
Yeah, and look, I'm just passionate about it. I'm passionate about, using what I've learned in my career, and I've been very privileged in the position I've been in, to let other people take advantage of it themselves. I can see the system's broken. I see people are angry, and I can see we're driving populism, splintering people left and right for no reason, but people are just looking to blame somebody for why they're in this mess. So we can talk all day about who's to blame or why it happened. The reality is, it is.
Mm-hmm.
So then it's about, okay, what is the solution? And the solution is here. It's this Web3 world. It's crypto. It's digital assets. This is where the potential is for all of us to leave that past behind. So yeah, I'm so passionate about just helping people understand what this is all about.
Right, and it's a much more positive take on a solution when it comes to like wealth disparity or inequality of wealth or distribution, which a lot of people are talking about. And it's instead of trying to take from people that have, it's this abundant way of looking at it. And it's like, no, you don't have to do that because there is so much out there, and you too can be abundant and just create more wealth. Like it doesn't have to be this finite game.
And also, what's really interesting, it is both very left wing and very right wing in what it does. Right wing in terms of economics. So it is pure free market capitalism. yet it's very progressive because it's all about community and how you treat the others around you and how you support that community. Now, this is bizarre because everybody else is still throwing mud at each other about, left versus right. And here is a solution where politics doesn't really get into it much. It does at Bitcoin level a bit, but outside of that, it's completely the opposite. So I love the fact here we've got free market capitalism and progressive values where society matters all together. And nobody gets penalized for it either. There's the taxation, the method of taxation or whatever is egalitarian. So everybody pays their fees by using the blockchain. And that's it.
Yeah, I mean, it seems like a really beautiful thing. I would say when it comes to like the politics of crypto and this emerging technology, a lot of people are attracted to it because it's being called like this censorship resistant financial tool or investment. But so recently with Canada and Coinbase specifically, we saw them kind of doing something that to me seemed against the whole like ethos and the whole point of crypto and web3, which is kind of that anonymity and sovereignty that comes with it. So it's like anything over $1,000 you have to like fully disclose both parties and it's being traced and all of that.
I have a different view on all of this.
Sure, yeah.
Go to the bank, take out $10,000. They ask you where it's going
Mm-hmm.
and who it's for
Right.
in cash.
Mm-hmm.
Right. So you can't use cash to do a lot of stuff because it is monitored. If you're going to try and put a large amount of money, if you're going to use cash to buy a house, they're going to ask you KYC, AML. That's been in place forever. So all of us use credit cards. All of us on Twitter, using Google, on Instagram. Every single thing that we do is being monitored by numerous parties. And our money is already being monitored. And we're restricted in cash. So it is what it is. Again, we can fight against it, but we need to find in this world a space for government too. Because if we try and throw out government, then they're going to fight us. And we've got a bigger fight on our hands. The best thing is to work with them, allow the adoption to happen, and then it becomes so powerful that there's nothing they can do about it. But if you try and have the fight too early, they do what they did in Canada, which is they force people to act in certain ways. But once it's too big, they can't. So, and some people come at this with different philosophies. Some people are freedom absolutists and privacy absolutists, but they will tell you that on Twitter and on their Instagram account. And all of that is being monitored, recorded, everything. So, it's kind of slightly crazy because that doesn't exist in the world. And, people talk about, well, they're going to know where our money goes. They know every single payment you have ever made in your entire lifetime. And the government can request it in seconds, as can other third parties from your bank. So, what are we hiding from? Now, the movement of money, this gives us a chance of having more ability to escape bad regimes, if the government is oppressive. It gives you that ability, but it's far from guaranteed. Much like gold gives you that ability, but it's far from guaranteed. So it's better at the margin, but everything on a blockchain is recorded. And everybody can track everything, which is why every time a big scam happens, the FBI and NSA track it down almost instantaneously.
So I guess there's not really reason to be concerned as far as like keeping which wallet you use, whether it's Coinbase or whether you have like a cold storage, as far as I guess government regulation goes, or because that's another conversation too, right? Is regulation, and does the community want it? What does that look like? And I guess like what are the consequences of that?
Yeah, so in terms of wallets, there's nothing we can do about that. But wallets, having a cold storage wallet makes yours more secure and the ability for you to cross borders. So let's say you don't like the government you're in. Let's say you're living in Russia or you're in Ukraine and you have to leave. Well, your wealth becomes instantly transportable. So that is a beauty of this system. In terms of regulation, there's going to be some sort of grand compromise. But what we're learning is that the more people adopt this before the regulation happens, the more voters they have to fight against if they're going to be hard on it.
Mm.
And particularly because of the demographic. It's this big millennial group that's the big users of this. These are voters who were not really big voters, but now they've got an issue that they would vote for because they have participated in this whole ecosystem. So I think we're going to see a lot of pushback on excess regulation. There'll be some regulation, that's fine. That's the compromise we will have to reach. But we will push back against bad regulation, regulation that makes it restrictive. Canada did what it did probably because it was still early in the adoption that massive numbers of voters couldn't say, fuck you.
Mm-hmm.
And so over time, it becomes harder to do. Although we saw that China did it. I mean, they're just huge numbers of users. They just said, sorry, you can't use this any longer.
Right, and I think that's the terrifying thing because it's like, well, what happens if that crackdown does happen?
So if you store on a cold storage wallet, what we saw is a bunch of Chinese going to Singapore, setting up accounts in Singapore, and they've got their crypto.
Oh,
So
there you go.
you still got it, and it's pretty difficult once you leave the borders for you to stop being used unless you're tracked down for criminal offences, in which case Interpol and the other kind of globalized way of dealing with crime kicks into place. But if you're just an individual, you're free.
Right, and then that's also been one of the talking points from the people that are pro-regulation is that it's just rampant with all of this criminal activity, and they're just trying to keep the consumer safe, which I've heard is kind of debunked. Like that's not really true, that there's still way more criminal behavior with fiat currency than with cryptocurrency. And then also it's like, well, if you really cared about the users or the consumers' finances, like you can go up to your eyeballs in student debt and no one really cares about that. Or you can have 20 credit cards and no one cares about that. So I'm really not convinced that you care about my financial well-being because there's all of these other indicators that say otherwise.
Yeah, I totally agree. I think it's a sham. And it's disgraceful that, you can go to Vegas, blow all your paycheck, but you can't buy a token. It's ludicrous. Or you can't invest in a VC. All you need is to tell people this is risky. You can lose your money.
Mm-hmm.
And there's a number of ways you can lose your money. But yes, to think it's acceptable for students to have, $100,000, $150,000 of debt, it's crazy. And then not give them a chance to make that money back. It's wrong. And it's not just at cryptocurrency level, it's at all investment level. What it does is perpetuates middlemen. You're not smart enough or rich enough to do this, so you have to come to me and I will help you do this, and I will charge you a layer of fees to make it possible. That's why it doesn't go away. There's too much vested interest by the financial industry. But, it's wrong. It's morally wrong. It's doing the opposite. It's perpetuating the rich-poor divide. It's lowering the opportunity set for people who are either younger or less well off, and it's not fair. It has to change.
So because you came from that industry, do you have old colleagues or old people from that space that are like, what are you doing? You're giving out all of our secrets?
No, most people in financial markets are just smart people who love, generally who love to look at the world and look and assess change and opportunities. And most of them start to see this as a change and an opportunity. I mean, most people aren't going around saying, well, we need to stop this. These guys are coming after our jobs. They're like, oh shit, this is happening. I need to get into this because if not, I'm not going to have a job, but this is amazing. There are more senior people in the industry at the very top who don't like it because it's their business that's being threatened. But every day I see that changing. Every day, I recently gave a talk, and Jamie Dimon was in the front row, who's the head of JPMorgan, and was a very anti-Bitcoin person. He was taking notes at the front, leaning forward, taking notes.
Mm-hmm.
So the world is changing, and people are changing, and people are understanding. So we're seeing the investment banks like Goldman Sachs and JPMorgan adopting this. People are saying it's inevitable. So I think that attitude from the financial system, from the kind of old guard, is slowly going, because they're also seeing a brain drain of people just leaving the industry, saying we're going to this new parallel future and it's more exciting. And then the people who've made the move, people like Mike Novogratz and Dan Moorhead and all these guys, have become extremely rich doing it. richer than, the people who are in the financial system. So it's like they figure it out fast.
Yeah, it seems like with any major disruption to any industry, you kind of have two choices, which is either adopt it and learn, or you can hold on to your old ways and die. And like it makes me think, because we've been watching Super Pumped, but it makes me think of like that transition from taxi cabs to Ubers. And I remember during the beginning of it, I was waiting on like a busy corner where cabs would like normally stop, or at an airport, and I'd be waiting, looking at my phone, waiting for my car. And a taxi cab would come up and they'd be like, "Oh, do you need a ride?" I'm like, "No, I have an Uber." And you would just get reamed at by this cab driver. Like, "You're killing our industry. You're taking my job." And like just a lot of anger and like heels digging in because they didn't want to just adopt this inevitable change. They were just trying to like fight and die to keep the old ways.
Yeah, look, it's really hard for people right now because there is so much change. We've got the system of money changing, how we transfer, store value around the world in ways that most people can't comprehend. You know, your mum's going to be scratching her head going, I don't understand this NFTs. What is this? This is all right. Because it's fear of change. She knows her checkbook and she knows her credit card and she knows, that, whatever certain things that she cherishes have value. She can't get it. Okay, fine. But that's happening at every level, from AI to data sciences to biotechnologies to um, EVs and green energy to cryptocurrencies. I mean, it's happening at scale. Robotics, space. It's all happening at a speed of which humans have never gone through before. I call it the exponential age. It's the fastest period of change that mankind has ever lived through. And we're right at the epicenter when all of these things are going exponential. I mean, just look at the number of electric cars from 10 years ago, and where it'll be in another 10 years will be 5 times where it is here, or 10 times. Same with the number of satellites going to space, where it's now cheap for even a university to chuck up a satellite to monitor climate change, or AI. How things like Shopify have made it at scale available for people to have recommendations for stuff that you and I could never do, because you have to be a developer or you have to find the right team. But it's now happening at scale, and factories are just robots now. They're not humans. It's scary.
It is scary and it's very hard to keep up, and it can make you very dizzy if you try to. So I guess when it comes, because feel like one of the things that you're known for is just like accurately predicting a lot of stuff ahead of time. Like you have a very good track record. So when it comes to the future of Bitcoin, and maybe we'll say like the Lightning Network and the future of Ethereum, like where do you see that going in 10 years?
So Bitcoin itself, I think the next phase for Bitcoin is being used as a long-term investment asset for, let's say, there's these things called sovereign wealth funds, and they're generally countries that have stuff like oil that's going to run out eventually. What they do is save some of the excess money that they make for the future of the country. They're called sovereign wealth funds. Abu Dhabi have them. Singapore has them for different reasons. A whole bunch of these countries. Those people are starting to wake up and say, this is a great asset for our future population's wealth. So they buy it and own it. So that's a trend that will happen. We will see some countries, smaller countries that have problems with their currencies, holding it in their reserves. And we will see borrowing and lending layers like we're seeing with Luna right now, using the collateral of Bitcoin for their stablecoin. So that's what I think about Bitcoin. It'll be that kind of pure vehicle for long-term savings and wealth holding. And that be for governments, countries, corporations, people. So the Lightning layer allows us to transfer money quickly around. Is that any better or different than using other ones? I think in 10 years' time, we'll have this conversation. You and I will be using all sorts of applications of which we won't even know or care what blockchain they're on. And they'll probably go across 6 different blockchains. We don't care. Much like I don't know what computer you're using. I don't know what internet provider you're on, what modem you're using. I don't know what software you're running. Nothing. Doesn't matter. It's called interoperability. Where this works now, digitally, we can connect with each other seamlessly without knowing anything about the underlying. So why should we care about what blockchain it is? Yes, we can invest in them, much like you could invest in Cisco router that you may be using. They're just different things. So I think that Bitcoin over time is, in 10 years' time, it's probably a, $50 trillion asset or so. So that's a, 50x from here. Maybe it's less, maybe it's $20 trillion. But the whole space, it's going to be $200 trillion. And it's currently $200 trillion now, as all of these different things get built out across all sorts of different ecosystems. And they all start interrelating and being interoperable with each other.
So I guess when we're talking long-term, I wanted to also touch on what people call as like the volatility. So people get really nervous, and I wrote it down. Let me see where the technical terms are. Again, I'm a learner and I'm here to look stupid for everybody else.
We're all learning, as I said. Don't worry.
It is, I'm just going to ask because I can't find it on my notepad, but it was like the difference between like day trading with Bitcoin and like seeing like trying to get out before a dip and then trying to buy before a spike, right? And just like making those kind of gambling bets versus dollar cost average.
So there are some people that I've seen who are really skilled at buying and selling stuff short term. It is really bloody hard. I hardly know anybody at all of the world's most famous hedge fund managers who use that strategy that really made wealth. There are some. The real wealth is made by spotting something that is got a long-term secular trend ahead of it and investing in that, and then not doing anything but just keep investing in that one theme. So in this case, let's say it's Bitcoin and Ethereum. We've talked about the role they both will play. So in 10 years' time, the probability of these being a magnitude higher in price is huge. So what you want to do then is it changes your mindset. You say, well, every time it sells off, like it did, over the last year, it's been down 50%. Well, I should be buying it because my expected future return has just gone up. Because let's say something's at 100 and you expect it to go to 500. So that goes up 5 times. If it's fallen to 50 and it's going to go to 500, it's now going to go up 10 times. You make double the amount of money. So you should be really happy to see these sell-offs over time because it means you can buy more cheap stuff and gives you a higher return for the future. And that's why dollar cost averaging takes the stress of trading away and just says every month or every week or every quarter, I'm going to stick some money in and I don't care where the price is and I might rush my buys if I think it's really fallen or add a bit extra because it's a good opportunity. But you just look at the long-term trend, and the way to look at these things, because if you look at the long-term trend on any normal chart, you go to TradingView or something, they all look like this. So it's not easy to look at. Use what's called a logarithmic trend, where it changes the scale, and then you can see these beautiful long trends emerge. And Bitcoin fit perfectly. Amazon was the same. Google was the same. They're all the same. You just find this, and then when it starts getting down to the bottom of that trend, it's a really interesting place, unless something has fundamentally changed and that particular token is not as robust, or it may be failing because of the community or the utility that it's offering. But with ETH and Bitcoin, it's pretty straightforward. And then it takes all the stress away, because what you're saying is, I don't want to access my money for 10 years. As opposed to, well, I'm going to buy and sell this, and I'm going to buy a watch, and I'm going to buy a holiday with this, and before you know it, you take too much risk because you can't afford your holiday, and then you have another bet, and then you've lost money, and it's a bloody shit show. What you should do is say, listen, I want to be able to afford a great house in 10 years' time. So my route to this is by investing in these cryptocurrencies, and I'll just do it over time, and I won't even look at how much my money goes up and down. And that's what I do. I just don't look at my P&L, my profit and loss. I just think, can I put more money in? And because I'm just thinking it's a long-term trade. It doesn't matter. It's like, we don't look at our house price every day. And like, has it gone up? Has it gone down? What do my neighbors sell for? It's like, that's stupid, because you're in their house for 5 years, 10 years. And so you think, okay, well, over time, hopefully it does okay.
No, I think that's really sound advice, because one of my favorite things to do is on either swing, like if it's extreme, is to go on Twitter, because the memes and the tweets are just incredible. Like people are losing their minds one way or another.
I mean, when Bitcoin was really going up, everyone was putting these laser eyes and counting every thousand in price. I'm like, please don't do this, because when this happens, bad things happen.
Uh-huh.
I always say, when you think your shit smells of roses, you're going to get your face rubbed in it. And that was exactly what happened, right? It collapsed. And the other one is, it's like monkeys throwing poo at each other when the price is down. Everyone hates each other. Everyone hates everything. Everyone's an idiot. It's all going to zero. Can't you see? It's ridiculous. But that's what it's human emotion, right? It's kind of an amazing thing to see it, because it's all over Twitter.
Right, and honestly, it gives me a lot more confidence in this space, because again, it comes down to the community, and the community is extremely invested in it, and very vigilant. So I think it's a huge indicator of its success.
Yeah, and you need to step back from being sucked in to the extremes of the community.
Mm-hmm.
So if everyone's really bearish and they all hate each other and they're all picking on each other, and the Bitcoin guys are picking on the ETH guys who are picking on the Solana guy, you know that it's probably somewhere near the low, because everybody's losing their shit.
Mm-hmm.
And if everybody's like having laser eyes and saying it's going to the moon, you probably want to hold off on your dollar cost averaging for a bit, because people are, over enthusiastic.
No, yeah, totally agree. This has been amazing. And again, thank you so much for coming on the podcast and sharing all of your knowledge. Do you want to tell the listeners where they can follow you, support you, and then any projects you might be working on?
Yeah, I think the easiest thing, I'm on Twitter a lot, and I engage with a lot of people. So at Raoul, RAOULGMI. So find me there. Real Vision, we set up, because I'm so passionate about this, we set up Real Vision Crypto, which is free. There's stuff behind the paywall for finance. It's actually not very expensive, and it's got the most amazing stuff in the world. But anybody's interested in crypto, realvisioncrypto.com. Just go there, sign up with your email, and that is a treasure trove of all of the most amazing people in the space, all of the learning you could ever want. I do a show every Friday that's my journey, like you. I'm doing the same as you. I just interview people and say, well, I just want to learn from you. And so mine's called Raoul's Adventures in Crypto, comes out every Friday. So all you need to do is pop in your email, and I promise you it'll change your life.
And I can tell you, my husband subscribes to all of that, and he is the biggest fan of your content. So yeah, definitely go check it out, everybody.
Fantastic.
Awesome. Thank you again.
Yeah, thanks so much. Really enjoyed it.
That's it for this week's episode of Chatting with Candice. If you enjoyed the podcast, please leave a 5-star review. Did you know that you can actually do that more than once? So if it's been a while, you can actually do that again. And if you know anyone that would like this content, you could share it with a buddy, maybe 2 or 3. And if you're watching, hit that like and subscribe. I'll see you next time.